Hello, everyone.
Hi, Vifat. Hi, Hassan. Hello.
Hello, Charlene.
Yeah. So, Hassan, you know, for Element, right? I sent you some comments. It's great project, and it's just a bit difficult for us to make money now. We don't have any advantage, to claim airdrop on behalf of users, and they don't charge fees, and they don't have tokens. It seems, it's a bit difficult right now, and it seems that, probably better to wait a little bit when the token is out. What do you think?
Look, I agree. I understand that, and I hear where you're coming from. I probably just, this stays in this conversation, but like basically, if you LP, you get tokens. So and I mean, maybe you could just tell the DAO members that, or people that are interested in Aladdin DAO, like basically my understanding is just mint what PT and YT, and then LP both of them. You will not be subject to a permanent loss on PT. And you will get, when they come with tokens, you will get the tokens with the retro airdrops. It is expensive, but like, it's going to be a nice airdrop. And so, yeah, I mean, I get it. It's hard for people, and it's hard for us to make money on it, but like, it's going to be a big airdrop. Like it has to be, because it's so expensive to use the protocol that they have to make it worth people's while. And my understanding is that because LPing provides the most value to the protocol, the people that LP will get the biggest amount of the airdrop.
Yeah, understand. Just we don't add too much value, for this.
Right. I see. Yeah. Right.
And we can talk about our new economic model in a bit. Okay.
Hi, everyone. Hello.
Yeah, Martin.
Hi.
Hey, Martin.
I guess we wait some more minutes here. Yeah, the time shift. I ask about the people in the US. The daylight saving. We discuss how we manage daylight saving, or how we should do this, because Europe shifted this week and US is shifting next week, and somehow, because we are really a worldwide organization, I would think that maybe we just leave it on the UTC time. So the call will shift to 1 hour earlier for the US next week. So any strong opinion on this? Somebody in the US?
Sorry, just to interrupt. Who is Kevin Zhang?
This is Ruby. I was writing the notes. Yeah, Kevin is the founder of Naos. I talked with Martin. I think I'm presenting Naos today. Yeah, I just met the team on the call for better communication.
Okay.
Hey guys, good to be here.
Hi.
Welcome.
So maybe it's a general question how big companies handle this kind of stuff. I never worked in a company who has been worldwide distributed. Okay, so it's a non-issue. Yeah, I would prefer to keep it to UTC because it's the last. Then just always the same UTC time, and then Europe and for Europe and America, this means we have to shift it twice a year. Okay.
And should we get started?
Yes. Okay. Yeah, I start the call. Today it's the 4th of November, and this is the 5th research call. We have VFAT presenting sorry,
Risk Harbor.
presenting risk harbor. Yeah, exactly. And VFED will go first, and then we have Ruby presenting Naos finance, and we have somebody from the Naos finance team, yeah, helping her if any questions are rising. So I will talk about general update and stuff now.
Recording in progress.
Yes. My notes. So we have, yeah, we talked about the code of conduct. I don't know if it circulated several times, and now it's like we're going to fix this, and maybe you can have a look again. The link is in the Boule member only channel on Discord, and yeah, we're going to implement this, I guess, starting of next week. We don't know if we should vote about this. I guess maybe we should make a vote, because it's concerning it's for the Boule, and the Boule should be aware of this. And if somebody is against this, then at least he should now raise his voice, because voting, in fact, it's not. If you vote about stuff, you should mostly know the outcome before, because it's not about like to make a signal vote. It's like you should. That's my idea about voting. If you have any concern about this, then please raise your voice somewhere, either in the forum or right now. And then a short overview about the state of integration of different projects. Thing is that so we have Lemma, yeah, because it hasn't launched, we can't integrate this. On Ribbon, technical integration has been done. Convex, technical integration has also been done. Yeah, Element, the thing is that we can take, yeah, we don't know if there's an airdrop, and we can't claim the airdrop afterwards, because anyway, I guess technically the airdrop will then go to the pool address we construct, and we don't know if there's any airdrop. Then Rary Capital is relatively special. I don't know if everyone knows. Rary had an attack yesterday, and it was like an official pool of them. It had a very low rating. There's a rating system in Rari, but anyway, somebody was able to manipulate the Oracle, because every pool is different, and I think the pool constructor, or the one who initiated the pool, can define which oracles are used, and this one used an oracle from Uniswap v3, and Uniswap has, it looks like a little bit problem there, because if the liquidity is very concentrated on one place, if you come over to this place where all the liquidity is concentrated, you have a huge shift in price, and this is what happened to Rari. So one of the pools has been like exploited, and they lost, I don't know the amount. And it's just it's not in fact it's not the Rari Capital protocol problem. It's much more fact that they allow somehow weak pools with weak oracles somehow. And of course, my personal take, it's also a little bit on Rari, because they should check this and be aware that this kind of stuff can happen. But it's just how it is, and this somehow, we don't know if it's really a good idea to integrate Rari.
Yeah, I just want to add a point on this, Martin. I think that the pool attacked yesterday was one of the verified pools.
Yes.
Rari is a great project, right? But I think we probably need to do a bit more analysis on the pools, on the cost of attacks on the Oracle side. So which pools are actually like recommended to be safe and good to be listed. So it will be great,
But Rari does a risk rating of the pools, and the pool who has been hacked had like the second lowest risk rating of like 5 or 6 ratings. So yeah, maybe there's a way, to think about this. Yeah, how we maybe at a later stage, if you can just integrate the R pools, or I don't know, B pools, or however you do it. And then
I don't think this was something that was like really specific to Rari though.
like someone correct me if I'm wrong, but I think this was a very similar vulnerability to what people thought was up with Aave the other day, like the other week, where it's those like sort of those stake tokens or something like that.
As I read, it's really about that, you know,
Like it was
it's
just
really
that Vesper pool, right?
yes, it's a Uniswap V3 problem effect, basically, because it's
just a low float. I mean, on
yeah,
Vesper.
it's low float, but
yeah, because like what
that
happened with
too.
Aave, it's a similar thing, but it just wasn't economically viable to exploit because like I guess there was too much capital there to really make it worth it. So that's all to say, like I don't know that it's necessarily like an issue with Rari versus just some underlying things that need to be fixed. So I don't have a super strong opinion one way or the other what we do here, but just to kind of highlight that.
I'd like to add to this as well. So because I mean I do a lot of work with in this sector. So that particular attack, yes, it was on the Rari platform, but it doesn't have anything to do with Rari themselves because it's a permissionless platform. Anyone can open a pool there. So for our integration, it just doesn't make any difference at all. We just have to pick specific pools that we do our own analysis on and only integrate with those specific pools. People can add anything they want to the platform, but it doesn't mean the platform as a whole has a problem.
Yeah, but
exactly.
this has been,
like,
it has been, you know, that you can, like on Rari, you can just, everyone can create a pool, but this has been a pool who has been whitelisted. So the team, you know, not a normal pool, if you just add a pool, nothing is going, that you're only whitelist if the team thinks it's okay, or I guess. I did check it, you know, there are many pools who are like somebody created, but most of them are empty. But I don't know. I think personally, I think also part of this is on Rari because they have to, if they whitelist stuff, they need to check. Yeah, maybe it's a new attack. Nobody knows. Anyway, this stuff happened.
Yeah. So Rari has been voted through, and so we just need a bit more details, right? On pools,
maybe.
Right, analysis on the exact pools, you know, to be recommended, and you know, that would be super helpful, right? So we need to go into the details on that.
Yeah, this is about the project, and then
right. So we need to do a bit analysis, which
yes.
You know, are recommended. Right?
And maybe we can just use the rating. You know, they have a rating system which is exactly. No, it's more about. It has to do with risks, basically.
But you know,
their rating system.
The one actually attacked was like, you know, verified. One of the verified.
Yeah, it was verified, but it had a low rating. You know, it had like a F rating.
Right.
A,
so
B, C, D.
For example, like what rating is good, right? So we probably need to define that clearly.
Yes. And yeah, this is about integration, and then there was like a vote about how we should vote, and now just tell everybody again, you should vote for every project you think it's you vote for, you vote against, you vote for, and if you don't know, you maybe vote neutral, and neutral will not be used to calculate your reward, but it's just that you see who votes regularly, basically. Then I hosted a contribution call yesterday, and we talked about different stuff. But one thing we talked about, we're going to change the economic model, and maybe I already talked about this, but shortly, yeah, we change the narrative, and we try. Basically, I think the main shift is that we say we take 100% fee of the token who somebody submits us to our pools, and then we're going to build like a ETF on this, and we have documents are in the working which describes this better, and I guess it's a good. We will reach out to the or publish this also in the Boule channel, because I think it's interesting to have feedback from people who do see a lot of products or ideas of how to make different products, and it will be very interesting to get feedback. And about this. The time scale is that the devs try to indicate is it should be like hopefully finished in, I guess, development like 2 or 3 weeks, and then audit 2 weeks. So if everything works out, then this integration will be done in a month or a little bit more. And then yeah, the thing is that yeah, maybe I know, Charlotte, you have to add anything to this.
Yeah, so we did put out a paper out there, and we still finalize on a couple of details on the staking solution, and I think that would be great if we can have the big brains involved to give us feedback and to improve that together, and so we'll have a complete paper on this out in the next couple of days, and I'll circulate that again in the Boule channel, and also we'll have a working group on this in the Future Economics channel, and yeah, so and we are very excited with the new narrative, just the ETF of prime DeFi assets that simplifies DeFi liquidity mining to just by holding Aladdin token, and we also have a marketing group working on the marketing plans and the new narratives, etc. It'll be great if any of the Boule members are interested to be part of those, and that'll be great. Yeah.
Yeah, I think that's mostly from my side. Just to add, I don't know if I'm somehow, we have like this, just I don't know if it's commonly knowledge that we have like this Boule Plus. People can stake like 5,000 Aladdin token, then they are a Boule Plus member, and I think it works like quite similar. Normally they vote before us on the same projects, and then we vote. And I think the Boule Plus is quite successful because we have many people staking 5,000 Aladdin token, and we see growth there. I think it growed like over like 30% last from 1 week to the next week. People vote more and locking up Aladdin token, and it's an interesting thing. Okay, so I think we kick off with VFET and his project. So VFET, you are welcome to start your presentation.
Give me 1 second.
Hi.
Can everyone see that?
Yes.
Great. So today I'll be presenting about Risk Harbor. Starting with the abstract, it's a risk management marketplace for decentralized finance that utilizes a completely automated, transparent, and impartial claims process to protect liquidity providers and stakers against smart contract hacks and attacks. I've taken a couple of slides from a slide deck from one of the community members in Risk Harbor. So 2 major issues with insurance protocols so far in DeFi is, one is, and the biggest one really, is that they require human governance. So to add new products that you want to protect or to verify claims, so far it has always been either the token holders or the project governance, and this creates problems. Obviously, it's not decentralized for a start, and then the second problem is low liquidity and capital inefficiency. Furthermore, third problem, yes, is slow payouts. So when an incident happens and the insurance provider has to pay out, it has to go through the entire governance process, which can take quite some time. Risk Harbor solution. So the major difference for Risk Harbor, which makes it the best project in the sector, in my view, is that it's completely decentralized. So they use oracles instead of relying on human input. So, for example, One second, sorry. Better do through this example. So you have a protected token. So in this particular example, it's Barnbridge CUSDC. The Oracle checks the price of the asset. If the asset cannot, if the asset price drops below a certain threshold called the default ratio, then and also this could be for a certain time, so it might have to fall under that threshold for an hour or so, then you can automatically submit a claim against it. So okay, let me do this. Okay, so I'll describe Risk Harbor version 1. So they've been live since June. They've been incentivizing underwriters with tickets, which will be redeemed for the token, which has not been released yet. And you have a single pool per protected asset. So, for example, there's a pool that protects the peg from MIM. So what happens is if so this particular one uses the Chainlink Oracle, I believe, for MIM. So if MIM drops below 0.95 USDT, anyone who has bought protection can automatically submit a claim against this and receive the underwriting token, which in this case is Compound USDT, and this expires on the 1st December. So yes, so the claims process is that the ratio is checked against using Oracle's Chainlink or Uniswap. The claim is processed automatically, and it covers lots of different things. So besides just the price, it can also check whether the contract has stopped working. So if a person is unable to, like say let's say for a compound token, if a person is unable to claim their underlying token from the contract, which means the contract has been bricked, then again the system is smart enough to know that they should pay these claims out. So this is version 1 of Risk Harbor. However, version 2, which is expected in 1.5–2 months, probably end of year, makes things quite a bit different. So the version 1 had one pool per asset. So you deposit your USDC, for example, and you can only underwrite one asset. You can only underwrite the MIM, the DPEG, or a compound, or anyway, something like the Barnbridge one, or just a single one at a time. On version 2, it's going to have leveraged underwriting. So with the same capital, can offer protection for multiple protocols. Secondly, the version 2 is going to be investing the underwriting capital in yield-earning assets such as Yearn and Aven Compound to earn yield at the same time. At launch, they are looking at doing 2 vaults, a low-risk one and a high-risk one. So, for example, the low-risk one will underwrite protocols A, B, and C, and the high-risk one will underwrite protocols D, E, F, and G. So the user will only deposit USDC to either the low-risk vault or the high-risk one, and they will automatically earn both the fees for providing insurance and also yield by the capital being invested. The token will be launched soon after version 2, but not at the same time, and it will be used to incentivize their vaults if necessary. So the goal is that the APR should be similar or competitive to other stablecoin farms. So if they see that the premiums and the underlying yield is not enough, they will add incentives with the RH, or what the ticker is not confirmed. They will add incentives on top. But this is not going to. This might not be necessary because the leveraged insurance premiums might end up being enough to have competitive yield. And then the next step after that is permissionless vaults. So this will be launched in 2022. There's no given date yet, but probably 2-3 months after version 2. And then anyone can create their own risk harbor vault, provided they stake enough RH tokens. They can choose which protocols to protect, what underlying assets, and which investment strategies to use to create yield. So I have, I'm proposing the following strategy for Aladdin DAO. On V2 launch, so for example, probably around January 2022, we would create 2 Aladdin DAO vaults, one for the low risk vault of risk harbor and one for the high risk. Users deposit their USDC and earn the protection premiums, the yield from the underlying strategy, and the possible RH tokens. Alternatively, if we want to do one for both, we could just create one Aladdin DAO vault and split the funds, for example, 75% low risk and 25% high risk. Secondly, upon the permissionless vault launch, probably somewhere around March, let's say, we can create our own risk harbor vault, where we can offer protection for protocols that we invest in, for example, Convex and Badger, etc. The users can deposit USDC into this vault to earn the premiums and the underlying yield. And we can offer protection as an optional extra to users when they're depositing, for example, to the Aladdin DAO Convex vault. Or we could just purchase protection for the entire, our entire Convex vault without the users having the option. So we just offer protection as a service. And then I've got some, okay, yeah. I've got a couple of comparison slides, but that's fine. That's more for reference. That's it.
Yeah, thank you for this presentation. I think it's a, yeah, it's an interesting model. The self-listing, I guess, it's somehow very interesting. But for myself, it sounds crazy gas intensive, as you need a lot of computation for this, and you can't go to a weaker chain, because if it's really on chain, you need the data from the chain you are on. Do you know? Do they have they just mainnet? That's the target only, or?
No, they are on multiple chains already.
Ah, okay, cool. Yeah. I know. Any other question? Yeah, I think self-listing is always very powerful. Somehow we see with Rari, it has risks too, but it's also quite powerful, because then people can just do it and use it how they think they use it. And but this also means if you self-list the pool, then maybe nobody's going to. Yeah, then the general public has like provide like insurance for this, or they do the underwriting. Then you hope just that somebody steps in and takes the risk, I guess.
Well, yeah, the premiums have to be enough so that it's worth it for people to provide the protection.
Yes.
But I think it can work well. And obviously, insurance is very important to be able to offer. And for example, they do have a pool already for the Rari Tetranode pool, so
yes,
you can purchase protection for that already. So yeah, this is definitely something that we can use for Rari ourselves.
Cool.
So I guess we would potentially be both buying premiums and then also underwriting like land and whitelisted pools. Is that the idea?
So I didn't understand it. Did you ask whether we'd be doing both things?
Yeah, like Aladdin itself.
Yes, I think so. Yeah.
Hey guys,
yeah.
maybe
yes,
I misunderstood. Oh no, go ahead, guys. What were you saying?
Sorry. So yeah, so for the first launch, we would only be underwriting. But then when the permissionless vault launches, then we would be both underwriting and offering protection to our own vaults.
Yeah, gotcha.
So I think it's really interesting, the idea of providing protection for Aladdin users in the future. I might have missed this in there. Is there an estimated yield for us, participating in Risk Harbor through Aladdin DAO. And I think the reason I ask that is so beyond protection, which I think is actually really clever for us to offer in the future. I know that my expectation has been that the yields would be rather low, and that's just because the cover, as far as I know right now in Risk Harbor, the premiums are really low. And so this has been something as like I have really participated and watched closely the insurance, the DeFi insurance vertical the last few years. And this has been a struggle with it, is that, while there's many who can be earning double, triple digits in terms of yield, insurance to me is like a model that I really do believe here will work. But the struggle has been trying to convince folks to want to participate in something that is, less of the degen yields, less of the, less likely to earn, let's say, 50 to 100%. So anyways, to clarify, I think this idea of cover makes potentially some sense, but VFed, do you have any like estimate or idea of like what it might be in terms of the yield that we would be earning?
Yes, so for your previous point, the premiums have been very low so far, in these 6 months that's been live, because they've been giving out the tickets for their tokens, so they essentially they were undercutting the premiums. So the people that were doing underwriting, they didn't have to ask for high premiums because they were getting the tokens, so they were getting paid in that way. But when there are no token incentives or low ones, the premiums are going to be much higher, especially for stuff like Rari. So their goal is to offer competitive stablecoin yields, which is probably going to be in the 25% range, I think.
Very cool. Yeah, it definitely is something I'll be keeping an eye out for then. I mean, if we could eventually earn 25%, that definitely is enough, I think, to warrant the attention of those using Aladdin DAO. Do you have an estimate, like time-wise, of when some of those yields are expected to go up? Or I guess you mentioned they've been in this sort of bootstrapping period, so I'm wondering like what's the next milestone in their roadmap?
Yeah, so that's all stopped now, and their version 2 is meant to launch probably end of year. So we'll have a pretty good picture in January, I believe.
Awesome. No, thanks so much. Appreciate it.
And the take is that they create the token, or they put the token into the wild after they released the version 2.
Yeah.
Okay. So you get like a shadow token or right now?
For now, yeah, you've been getting a ticket, they call it.
Yeah.
And you don't know how many of the actual token you're going to get per ticket.
Okay. Yes. Okay, thanks. Are there any other questions or hints? Okay, so I guess we move then to Ruby, who is presenting Naos Finance. Or I guess you first present, and maybe we have questions on the. We see the screen.
Yeah, thank you, Martin. And since Kevin is here, I'll quickly go through the protocol and leave more time for the team to answer if there are any questions. So the protocol I'm going to introduce today is called Naos Finance. It's a real-world asset lending protocol, basically helping the DeFi capital to matching to the off-chain like assets like SME loans or individual credits over there. The reason why we look into this sector, because we see currently the DeFi world, if we move into see it as a balance sheet, the assets is more for our on-chain activities like tradings, commissions, or lending fees, so on and so forth. But even though DeFi is growing really big right now, but we see there's still a large potential of assets in the off-chain world, and that's why we see like Maker seeking for real world asset on chain. We see like Clemma working for carbon credit to bring those digital real world asset on chain. So we think this sector could be of big potential, and there could be some good alpha here. That's why we found the team and the protocol Naos. So currently, Naos already launched their product called Formation, which is the product for the capital set, and waiting for the launch of their asset marketplace called Galaxy, which they will put all the real asset into the NFT format and match those assets with the capital providers, forming an NFT lending marketplace. So I think at the current stage, it will be present a really good farming and holding opportunity for us, because it's the sector itself is now that hot right now, and the product itself is moving very steadily, but in a local stage. And if we look into the numbers, we could see that for the Curve stable coin pool, it is providing us like 40% over APY right now. And if we put the yield farming reward Naos token into their single staking wall, we'll generate another like 10% plus APY. So total around 45% of APY for us to do a stable coin farming. It's a really good number, even though in the current like bull market, and there's didn't take consideration about what the token price, upside of the token price here. And since NUSD is using the DAI as the underlying support over there, so the risk of the NUSD get impact from the DAI is really, really low. So which the risk reward here is really good. And if you look into the valuation here, the market cap for Naos right now is only 40 million, with a fully valuation FDV like less than 300 million. And several protocols also working in this sector, including like Persistence or Centrifuge, their valuation is much, much higher than Naos. So even though we put into a really, really consistent scenario that Naos only compare like at the same with their peers, there's still good potential for the valuation to go up. And given that what Naos team is good at like asset origination with their like partnership network in the off-chain network, I think there will be large potential for the team to like compete for the leading position here. So yeah, that's the like farming logic here. And some details we can look into the product. One is their NFT lending marketplace and Galaxy. It's only in like ring by testnet right now. I think it will be launching within this quarter, very, very soon. So basically, the protocol help to mint those real world asset contract into the NFT, and it will be record on IPFS. And you will see like each asset will be more like a single pool here, and users could see what is behind the asset over there and can choose the tenor and the yield to invest in. And they work their off-chain partners that was really long experience with asset origination, risk management. And they also hold very good like multiple finance fintech like licenses around different regions, so they can do the lending and origin and asset there in a compliance way to monitor the off-chain assets. And also in order to solve the risk part, they tranche the yield stream into the alpha pool and the beta insurance pool. So currently the setup is that beta is 10% of the entire pool size. So it will allow us that 10% of the first loss of guarantee in any of the default event for the underlying asset. And the formation part is more for the capital set. They borrow the design of Alchemist of the Transmute. So they create a native stablecoin NUSD, and it is pegged to that as the same mechanism with Alchemist. And it will help boost the yield from the underlying asset. It will also enable users to lend against their future yield, but the yield is generating from the real world asset portfolio. And Naos is moving pretty good in building up the the ecosystem. Not only they are trying to provide capital from their own NUSD, they are partnering with Maker and D-Force to provide additional capital for those assets. They have done a very good proposal in the Maker community back to May this year, and it was just passed, I think, 1.5 months ago. So Maker will be a lending partner with Naos, and together using this proposal is working with Centralfish as well to provide like capital to the off-chain asset. And other partners, including eSign, helping to work with the sign of the contract and Serial Wallet and execute it, and also working with Chainlink to bring an LTX to bring real world data for their risk management purpose. And some overview of their backers, including Coinbase, Mechanism Capital, Spartan, Huobi, so on and so forth. And here is a overview of their recent roadmaps. I'll stop here first and see if anyone have any questions.
Yes.
Thanks.
Thanks for that. I guess one main question I have is, it seems like a lot of this is dependent on the asset originators, which it was mentioned that they're really just primarily leaning on partners. I guess, are you able to speak in more detail about those partners, since that is one major crux of the protocol?
Sure. Kelvin,
Sure.
Yeah.
Yeah, I agree. This is actually our biggest advantage. So we're actually one of the only, I would say from what I can see, right, the only DeFi protocol that actually has financing licenses. So we're not only depending on partners to do asset origination, right? The only reason why we're working with asset originator is to scale the type of asset that we come from chain, right? So right now we already onboarded close to $250 million worth of real world assets, and that's from the existing partnership under our financing license. So we can originate ourselves, and we can also partner with others to help us scale.
Got it. Okay, thanks. And then are you guys? I know there's a huge breadth of assets that could be, in the category of real world assets, of course. Are you guys conducting diligence? Because I saw some at the top line or at the top of this Notion doc, there's like SMB lending and things like that. So are you guys doing like primary research and diligence on those borrowers, or how does that work?
Is the question centered around the type of assets or how we do due diligence?
The diligence process.
Okay, yeah, the due diligence. So right now we have the benefit of picking and choosing like the type of partner we want to work with, right? So obviously we're working from a top-down approach. Some of our asset originator or partners that providing real world assets are in the Fortune 500 companies, right? So, but obviously as we scale, that's not going to be feasible, right? At some time we have to work with like smaller, less proven company in the emerging markets. So that's when we have to work with asset originators at the local level who are more in tune with what's going on, right? So right now we already have an internal team to do the basic vetting, looking at the materials, and the type of materials and documentation required are just basically the same information that you will need to provide to your bank or financial institution to do the evaluation. The reason why we're working with IOTEX and a couple other data providers is that we realize that in the emerging markets, financial data are not readily available. So we are creating this alternative credit scoring system to help us triangulate that credit worthiness of that underlying asset. So I think there are a couple things that we need to focus on, right? Number one is the preliminary filtering of the asset. Second is to make sure that we have a couple different layers of insurance protection should there be the default or non-payment, right? So it's basically a risk control sort of mindset that we have to carry on here.
Great, thank you so much for that. That makes sense.
No problem. Yeah, any other questions?
Yes, I don't know. Other questions? Me personally, I only know Centrifuge a little bit, what they do. You still work together? You did work together, or?
Sorry, Martin, is your question regarding?
Did you? Yeah, it's a question. Did you work with Centrifuge as a partner, or how? Because
Yeah.
you said on the maker.
Right, we are working with Centrifuge. So Centrifuge has been around the block for quite some time. I believe close to 4 years now, right?
Yes.
Yeah, and we look up to them, right? Because I think they are a trailblazer of the real world asset arena. They definitely opened a lot of doors already, right? So I think our protocol has pretty much similar concept, but we have a very different design, right? So for Centrifuge, they adopting the senior and junior tranche sort of issue, right? So allowing, like, they're basically segregating investor into the senior and junior tranche, and all the capital amassed from DeFi will be channeled to real world lending, right? They themselves do not have a liquidity pool. So essentially, if you look at Centrifuge, they are a tech stack plus consulting firm, right? Meaning that if a corporate borrower wants to get money from or get funding from Maker, they will probably have to use Centrifuge tech stack, and then they have to go through the Maker application with the help of Centrifuge, right? The way Naos works is a little different. So we can go through the same process with Maker, right? So we can have the corporate borrower using the Naos tech stack, and then we can walk them through the Maker process. And at the same time, we have built our own liquidity pool, so we can actually deploy capital ourselves without having to go through the Maker process. The Maker process usually takes between 8 to 14 months, if that works. So I mean, that in our cases, for our corporate borrowers, realistically, that's just not going to work.
Yeah, that's ages, for crypto, it's ages anyway. Several months, yeah.
Yeah.
Okay, thanks.
Sure.
Kevin, I have a question. So what are the types of loans you will accept in the beginning? Like consumer loans, business loans, and what if it defaults? And like, let's say in the beginning, maybe 1 or 2 cases accounts for the major part of the assets. What if defaults, and how does that affect the stable coins you created?
Sure. Okay. I'll jump into the last question first, right? So the stablecoin we created are pegged to DAI, right? So it's unaffected, right? So essentially, the NUSD or the stablecoin is not backed by the real world assets, right? We do have a plan to move towards that direction. So ultimately, we can see that once we scale the asset on chain, we might be able to reissue NUSD based on the value of the real world asset that we manage. So far, right now, to start, we support like any type of corporate loans, right? Corporate loans, account receivables, any type of loan that has a stable and fixed principal value, right? So the reason why we're doing this is that we don't want to deal with the asset appraisal and evaluation steps at this point in time. I think the industry is a little too early for that, but we do have a plan moving towards real estate funding, like equipment funding, right? But that requires a process and standard to trust a third party and to determine the price at any given point in time, right? So that's the reason why we're choosing trade financing, supply chain finance, and loan. And by itself, it's already a multi-trillion-dollar market cap, market opportunity, right? So obviously, inventory financing is also represent a huge opportunity that we'll look at, but we have to create a process where the community can reach a consensus on the value of the underlying asset, and there's no better way to do it other than just corporate loans for now. Oh, sorry, and sorry to address the default issue. So far, we do have that beta insurance pool in place, right? So essentially, for every asset originator, let's just say if we create a $5 million alpha pool to be deployed in the real world, right? We look at the historical default rate, and most of the asset we're working with right now has a sub 1% default, and we usually create a 10 to 15% buffer to cover that cases, right? So essentially, we're creating a 10 times more coverage on the insurance side. So should there be a case of default, the beta pool will make up for the differences in the alpha pool to make sure the principal value is intact, and then the interest income are still remain the same.
But that's assuming you have a large pool or portfolio of loans. Is that going to be the case? That means you have a lot of very small corporate loans, and they kind of come together in a package in the beginning. I don't know, like how long you will get there, or it's actually in the beginning you're taking a slice of kind of a large portfolio, which I don't know which way it is.
Yeah, that's a really good question, right? So there are a couple of ways to do this, and we decided to launch individual pools for different type of assets, right? So previously we were thinking about creating one giant pool of different type of assets and one beta pool, right? But we realized that on a risk profile perspective and risk management perspective, it's actually harder to manage, right? So right now we are creating pool based on the asset originator, right? The asset originator can be, say, like a fintech company covering Southeast Asia, right? And we will only select the type of asset that actually has the same risk profile. So in theory, like after the Galaxy launch, you would be able to see multiple pools on the Galaxy page with different terms, different risk profile, different credit rating, and different expected yield.
Got it. So you actually leverage credit assessment system from the third party. You're taking a slice of a large chunk portfolio from them instead of originating loans from individual corporations, right?
We do both, right? So
okay, both.
So for example, the Fortune 500 company, we deal with them directly, right? Because they bring size and scale, right? But then they're like, you ask about consumer lending, right? So we're not going to be able to lend to consumer individually at this point in time. So we'll be lending to the fintech company that lends to the individuals, right? So it's basically how we think about the strategy of asset origination. We can work with asset originator, and we can also originate those loans ourselves. And you're asking the question about credit rating. Sure. I mean, we are working with Chainlink to co-develop an Oracle solution for real-world assets, right? So we will be able to onboard telco data, location data, banking data. We're talking to Moody right now to onboard their credit ratings on chain, right? So the purpose of that is to pave the road for the community to be able to participate in the asset onboarding process and decision-making process, right? So I think we don't want to be like Maker, where every single decision had to be approved by the entire community, and the community has to make a decision based on pretty complicated information, right? We want to make it a little bit more transparent and straightforward in a way that we will build a track record through us initially, right? And then we will have all the repayment history, all the track records on chain, right? And then we will compile that into a quote-unquote Naos credit score, right? So our community member in a near future, they will be able to look at an asset or look at an asset originator and look at the credit score associated with that type of asset, and they have an immediate, recognition on, where does the risk profile stands.
Okay, thanks.
Okay. No problem. So just to elaborate on that, right? So our latest partnership with IoTex is essentially to addressing the issue that, for a lot of emerging markets, financial data is not readily available. So we need to look at, alternative data, right? So for example, like warehousing, energy, like consumption, right? Like the inventory movements, stuff like that, right? So to help us triangulate that credit, the credit readiness or credit worthiness of that particular borrowers.
Yeah, thank you. Are there other questions about this or ideas, hints? So Ruby, you suggest that we use the pools and farm that token basically, because
Yeah, I think is that we can go with the stablecoin pool and we can generate additional yield to go to the staking pool.
So I have a question about the stable coin. And can you maybe explain it again? How is it? How is it? How is it created, basically?
Sure. So essentially, the stablecoin pool is the lending pool, right? So just think of us as compound, right? So you log in your stables, and then your value is basically logged in or being borrowed by someone else, right? And you're generating a yield for interest. We're doing the same, right? Except that our counterparty is not individuals. Our counterparty is the corporate borrowers, right? The yield that the yield that's being generated from the stable pool are the income, like the income generated from those real world assets. So essentially, we are taking the DeFi liquidity and then lending it out to borrowers globally. So this is referring to specifically the alpha pool, right? And for each one of those pools, each one of those asset pool, we have alpha, like this dedicated alpha and dedicated beta pool. So beta takes NUSD, which is being generated from formation, or you can just take your DAI, BUSD or USDT and deposit directly into the alpha pool.
And then you deposit your DAI and then you get NUSD back.
For now, yes, and we're supporting.
Okay.
We're supporting other type of stables. In a month of time. Yep.
Yeah, just think about the risk tool who this NUSD then holds. Basically, it holds the whole.
Yeah, I think at the beginning stage, the underlying of the USD is supported by the stables. So that's why I was saying that if we are supplying our liquidity into the curve pool, the risks of the NUSD to be depacked from the stable is really low.
Yes. Okay. Yeah, we have like 4 more minutes to fill the hour. So other questions or anything else? Kevin, maybe I'm always interested how a project are managing like this multi-chain world somehow. And what's your target there? Your mainnet, and then I guess your mainnet right now only, or
yeah, our Galaxy mainnet is launching in a month of time, right? And we will be both on Ethereum and BSC, but we will be building specifically on the BSC like in the near term. Other cross-chain opportunity, we're constantly looking at it. But I think the focus right now is to make sure that we can scale up the asset on chain, and then increase the circulation supply of NUSD.
Okay. Thanks. So I suggest that we close the call here. If there's no other questions, thank you for coming to the call, Kevin, and Ruby for presenting, and Vivek too. I think, yeah, this has been both completely new projects to me, and this is quite interesting stuff. So thank you for joining, and see you next week all together at the same, no, not the same hour. Yeah, maybe have a look out when it's happening, because I think we keep it to UTC. Sorry to close that. Bye. So if your time is shifting, you're shifted to shift too. Bye.
Thank you.
Thanks for having me. Thank you,
guys. Thanks for the
you for
presentations,
listening.
guys. That was really great.
Thank you.